cost insights and applications on the Nigerian Tax Reform Act. Of course, my name is Isaiah Bayomi from Next Page Tutors, and I'll be your host for this session. Now, just a quick background to this session. So for this session, we aim at providing practical breakdown and as well as technical implications of this new Tax Reform Act. And of course, I'll be joined by numerous speakers from top brands as top tax professionals to provide us technical perspective and, of course, practical insights to this act. Once again, I would encourage us to stay glued to our screen, engage the conversation. If you have questions, please use the chat box. And if it's something you would like to speak about, of course, we have created a dedicated session for question and answer where we can provide solutions to those questions. Okay. I will just kick off this conversation with a brief overview of this act. Please confirm you can still see my slide.
Yes, your slide is up. Just go on. Thank you.
All right. So the first thing we need to highlight in this conversation is to the background of this act, right? Of course, we all know that this act was signed in by the current administration led by President Bola Ahmed Tinubu. So he signed this reform bill to a law on 26 June 2025. And of course, it's expected to start full implementation from 1st January 2026, right? And the objective of this session, of this act rather, is majorly into three. So it's basically first to consolidate and close up gaps that are already existing in our tax system. And of course, is to help enhance equity and digitize tax processes, right? And lastly, another objective is to basically harmonize the tax administrative body across tiers of government and improve ease of doing business. So basically, these are all of the objectives captured in why we are having this Tax Reform Act that is going to take full implementation from 1st January 2026. Okay, so at this point, we'll be moving to other aspects of this conversation. And the first aspect we'll be looking at is the company income tax bit of this act, right? And for this, I'll be joined by a top tax professional, right, named Yunus. So Motosho Yunus, are you on the call? So please confirm you're on the call so that we can.
Yes, as I am on the call.
Okay. All right. Confirm you can see my screen also, Yunus.
I can see your screen.
All right. So, yeah, you have the floor.
Okay, good day, everyone. It's nice to have you all here. Here at NPT, just trying to find a way to ensure that you're all informed about and you're all prepared with respect to the Nigeria tax system coming, will I say next month? I don't want to use the word next year again, just to say coming in a couple of days, right? Or next month. So the president, right, signed four major tax acts. Because prior to now, we have series of Nigerian tax acts. Series of acts, we have a different act for value-added tax, a different act for company income tax, and series of taxes that we have different laws, different books for them. What we have here is the president said it doesn't really speak well for someone to come into Nigeria and say, oh, can I even know the books that talks about tax in Nigeria? We have series of them. So the president said, let's find a way to harmonize, as I mentioned earlier. So the president signed into law four different acts that we have in Nigeria currently, effective next year. The number one of it is the Nigerian Tax Act. This is a book or an act that kind of repeals, meaning deletes about 12 different acts, right? And then it's amend about 15 different legislations. So in this one single book, one single act. We have more than 20 different acts that was harmonized to put into one. So this is where we are going to, if you want to know the income that is taxable for your company, check the Nigerian NTA. If you want to know, is my company taxable or not, check the Nigerian NTA. The second one, we have what we call the Joint Revenue Board Act, right? So this part now, we have what we call a joint tax board. This particular board are the one that, among them, we have a particular tribunal that we call the tax ombuds, which find a way to reconcile disputes if there's a particular dispute between a taxpayer and the legislation. You can just go to them, talk to them about your issue, and then they'll find a way to ensure that taxpayer is fine, to ensure that you are not being bullied. Let me use the word bullied, or there is what a fair judgment when it comes to tax in Nigeria. Number 3, we have the Nigerian Tax Administration Act. This act governs the collection of government revenue and also how the revenue will be shared among the various government arms of government, right? The last one, which is the fourth one, we have the Nigeria Revenue Service Act. This particular act governs the operation of the government administrators, in the sense that it is in this act that we have it that, it does not really make sense saying we have a body that does not only collect tax of federal government, right? And we are not calling them Federal Inland Revenue Service. If you don't know, FIRS do not just collect tax for federal government alone. All the company income tax and all the various tax that you pay, that companies pay, right, does not only belong to FIRS. It belongs to both the FIRS, the state, and local government. So they are like, it doesn't really make sense. Let's change this. We can't be having FIRS collect tax, having custom collect tax, having this. In fact, I've seen where police even sent to a complaint a letter that they also want to collect what tax from them. So this particular act settled the particular issue and also says that we need to change the name called FIRS to the Nigerian Revenue Service. So again, we will not be hearing FIRS again coming next month. This is just a brief overview of what we have as the new tax act that we have in Nigeria, which they are all 4 in numbers. Okay, let's go into it. This first part that we are about to look at talks about every one of us. The name is just company income tax, right? And then let me just do a little background. It is the taxation that is being paid by companies that are incorporated in Nigeria or companies that earns income or derive income in Nigeria, meaning that be it a company, a Nigerian company or a foreign company, they are meant to pay tax to us here in Nigeria. This act that we have brings about a new thing. Take, for instance, currently, companies pay tax to us here in Nigeria. The rate of tax in Nigeria currently ranges between 0% to 30%, saying that currently we have small business or small company, we have a medium company, also we have a large company. So the current law says that a small company is a company whose revenue, gross turnover, is between 0 to 25 million naira. And we now have a medium company whose revenue or turnover is between 25 to 100 million naira. If a company is a small company currently, you will not pay tax. Your tax rate is 0%. If you are a medium company, we know you are not that big. We are going to pity you in the sense that you will not pay 0, you will not pay tax, you are going to pay 20%. But any companies whose revenue or turnover it's more than 100 million naira, they are large companies, right? So currently their own tax rate is 30%. But the president said, no, this thing needs to stop. We need to stop saying small, medium, or large, right? If you're not big, you are small. In the sense that the president mentioned, I can remember he said, in Nigeria, we need to stop taxing seed, right? If you are not big, if you are small, let's encourage you. Now what we have currently, based on the introduction of the new tax act, effective next year, is saying that we will only have two different sets of complaint, a small complaint or a large complaint, right? So we are saying that, what do we now call a small complaint? Any complaint whose revenue, right? I will say this, whose revenue is below 50 million naira, right? You are a small complaint. And then, provided that the complaint asset also is no more than 250 million naira. Take, for instance, we have complaint A. Complaint A's revenue, right? A complaint A's revenue is no more than 50 million naira, right? And that complaint, same complaint A, if you look at the total value of their assets, it is not even more than 250 million naira. This company is a small company. Let's let it grow, in the sense that this company will not pay tax to us in Nigeria. Their tax rate will not be 0%. Yes, I understand that. We might have like, guy, are you saying a small company is a company whose revenue is not up to 50 million naira or 100 million naira? We have that dispute, right? If you look at, we mentioned earlier that we have four different acts, right? We have the Nigerian word NTAA. NTA governs the company itself. NTA mentioned 50 million naira. But if you look at the NTAA, it says that a small business is a business that has a revenue whose revenue is not up to 100 million naira. So again, this must not confuse you. We are here to just simplify this to you. You should understand that obviously there's going to be a circular that will simplify this and give more directive about this angle. That is a small company complains whose revenue is below 50 or below 100. It's not a problem. Just know that a small complaints will not pay tax laws in Nigeria. Their tax rate is 0%. While any complaint that is different from what we have mentioned earlier, they are called a large complaint, and they have to pay tax to all at the rate of 30%. That is clear. Sorry, can you go again? Let me see what we have there. If I've captured everything. Oh, that's fine. That's fine. So, the next slide, please. Yes. So, you should understand that in the NTA, right, we have a list of different income that will be taxed. And the tax rate, we are not taxing you on your income. We are taxing company on their profits. But before now, if a company disposed an asset, right, in MPT, we tell students that we don't use the word sales when you dispose an asset. We use the word disposal. When a company disposes an asset, meaning that we have a company A, right? The company's name is Damilare Limited. Damilare Limited has a small generator. That generator is an asset to Damilare Limited, not an inventory. So if Damilare Limited dispose its generator, which is an asset to Damilare Limited, right? Look at it. What you have disposed is a capital asset, right? It's your asset. Let's check. Do you have a gain on it or you don't have a gain? So the law says that when you have a gain, accountants, their own is to record all inflows. Accountants will say that figure is an income to you. They can call it other income. That's why I want to ask you that, guy, we will not tax this gain on disposal of the generator under company income tax. So it will be considered as a non-taxable income for company income tax purposes. It will not be taxed under a different tax called what? Capital gain tax, right? That means that currently, when you have a gain on your disposal, you pay a capital gain tax at the rate of 10%. But this new tax act is saying that, why are we disturbing companies now? Which one is company income tax? Which one is capital gain tax? Let's make everything once. Just one single thing. Meaning that this new act says that if a company have a gain from the disposal of assets, not just asset, right? Shares, you have shares, right? Let's say you bought MPT shares in the future, you understand? And you have a gain, right? Which is a capital gain, or right, or debt, or crypto. My crypto guys, yes, this law is there for you, right? So now it's now saying that when you would have a gain, right, we will need to scrap what we call capital gain tax. We will not only be having a single tax called what? Company income tax. So meaning that both your profits and your gain on disposal, right, it will not be taxed using what? 30%. However, there's something that you need to note. In shares, we want people to come and invest money in Nigeria, buy Nigerian shares. When you dispose your rights or a share in Nigerian company, we will not just tax the gain. We will need to check, wait, come. You sold your shares in A Limited, right? We need to check. As far as your revenue that you made from it, I mean the gain that you made from that particular disposal, as far as that gain, that chargeable gain, right, is not more than 10 million naira. Do you understand? And what you receive when you dispose it is not more than 50 million naira. You will not pay capital gain tax. What's the meaning of this? Take for instance, I have a shares in Mobad Limited, right? Mobad Limited. Let's say that shares, when I bought that particular shares, I purchased that shares at the cost of 2 million naira. The shares cost me 2 million naira. But when I dispose it, I dispose the share for 100 million naira. I dispose the shares for what? 100 million naira. Right. If you look at it, they are going to ask you, how much is that? There are two thresholds when it comes to shares. First thing is that, how much do you receive? If what you receive currently is not more than 150 million naira, and what you gain from it is no more than 10 million naira, you will not pick up that gain tax. So my 2 million naira cost value of share that I bought, I sold it for 100 million naira. That means that what is the gain? I will say the 100 million naira revenue, right, less the cost of what? 2 million naira. That means that my actual gain when I dispose that particular shares, when I remove my cost, is 98 million naira. Like, wow, guy, you have money. First trigger is that what you have as a gain is 98 million naira. Number one thing is that it's more than 10 million naira. We'll check again. Guy, Alpha, how much do you receive? The inflow to your company is that much. Like, the inflow is just 100 million naira. That means that you did not meet the true trigger, right? Actually, your revenue from that shares is 100 million naira, lower than 150, but your gain is more than 10 million naira. For such complaint will be subject to what? A capital gain tax. But what if we now have a different complaint? The company bought their shares, right, for let's say 5 million naira, right? When they dispose the shares, they dispose the share for 20 million naira. That means that it cost me 5. When I dispose, my income is what? 20. Do you have a gain? We'll check. Oh, let's remove the cost of 5 from 20. I have what? A gain of 10 million naira. We'll check. First thing is that I have, okay, let's say it cost me 5 million naira, right? But I dispose the share for 7 million naira. That means that I have a gain of just 2 million naira. First trigger is that you ask yourself, is the gain more than 10 million naira? Obviously, no. My gain is just what? 2 million naira. I buy them for how much? You bought it for 5 million. You sold it for 7 million naira. That means that you only have a gain of 2 million naira. I say, thank God though, it's not even up to what? 10 million naira threshold. The first thing that we'll check, what you receive when you dispose the share, is it up to 150 million naira? They will say no. How much you receive? Just 7 million naira. We'll say you are good to go, you are fine. So that is what we need to check. When it comes to share, you look at two triggers. First one is that is the revenue not more than 150 million naira. Two is that is the gain not more than 10 million naira. So that's fine. Yes. So we have what we call minimum tax, right? Minimum tax. Although currently what we have is a minimum tax. As far as we are concerned in company income tax, currently we said a company's minimum tax, any company that is not a small company, at least you are not small now, you are big, but you have a loss. Let me just do a little background. What's the meaning of minimum tax? You know, a company have a tax to pay. Currently, assuming a company is a large company, their tax rate is 30%. When we check 30% of your taxable profits, we'll compare whatever the result is with a minimum tax. The current minimum tax that we have here in Nigeria currently is 0.5% of your gross turnover less franked investment income. So he's saying that at least, guy, you don't compare at all. You must pay 0.5% of your gross turnover. Yes. But this law is saying that, are you joking? Who should be minimum tax again? No. It doesn't make sense now. A company does not have a profit. You are saying, come and pay tax on your revenue. It doesn't make sense. Again, the president said, we will not tax your seed, right? We will tax your fruit. The new law is saying that let's scrap what we call minimum tax. Now we'll not be having what we call effective tax rate. Effective tax rate. What is the meaning of it? We are saying that any company, right, whose total revenue or turnover is more than 50 billion naira, you are big now, or you are a member of a multinational entities. Do you understand? That complaint, at least, when we look at what we call effective tax rate, what is effective tax rate? Me just saying that, let's say, how much tax did you pay, right, over your, let's say, over your taxable what? Your taxable income, or over your what? Your net profit. So we are trying to look at it. A complaint effective tax rate, this new law is saying that no, for every complaint, we have scrapped minimum tax for you. We will now be looking at effective tax rate. What is it? He's saying that this act guides us on how to get effective tax rates. He's saying that we will look at how much tax did you pay. It's called tax cover, right? How much tax did you pay over what we call your net income, right? Over your net income. So what we are saying is, we'll look at the total amount of, let's say, a company pays the tax of 2 million naira, right? What will not check? What is the company's net income, right? They said this company's net income is let's say their net income is 10 million naira. We will check what is the percentage of 2, right, from 10. If the percentage of 2 tax that you have paid, right, on your on the percentage of tax that you have paid on your net income, if it is not more, if it is not up to 15%, right, that company needs to pay us more. How far now? At least pay us 15%. At least pay us 15% of whatever your company has. So if you have a complaint, when we look at the ratio of the company's effective tax rate, if it is not up to 15%, that company will need to pay us more. We call it what? A top-up tax. That company will need to pay us. Let's say when we look at the percentage, it gives us 10%. We say, a company come up, you should have paid us at least, right, 15% of what you earn. Imagine me, myself, because an individual, if you don't know, an individual is paying more than 50% as personal income tax. If me, how much I get now, I'm paying more than 15% as personal income tax. A company that earns more than 50 billion naira cannot pay us 15% of what they earn. That's too bad. So we are saying that when we look at the percentage of what you have paid in Nigeria in a particular year, if it is not up to 15%, you pay the difference. You pay what? A top-up tax. If what you have paid before is 10%, you pay us 5% more. So that's what we have. Oh, okay. Here we are just looking at the section that talks about the income that is taxable and also the income that is not taxable. You need to understand that as far as we are concerned, MPT, our focus is to ensure that you are well equipped, not just by passing ICANN. We are saying that not all income is taxable. No, now there are some income that a company earns that are not taxable. How do you know that? Where will you check that? I'll give you a expo. Don't pay for it. Look at section 163 of the NTA. Talks about the incomes that your company earns that you not pay tax on them. Sure you understand? Part of it is number one. We are saying that we have some income that are exempted from tax. Number one is that if your complaint, right? If your complaint, currently what we have is any income, when you buy a bond, right? When you buy a bond, you have an interest on the bond that you have purchased. So when a company have interest income from bond, currently the law is saying that the law is saying that if a company earns an income from the disposal of state government bond rights, it is not exempted from tax, saying that the only interest income on bond that we are going to exempt is interest income from federal government bond. Tinubu is saying that no now, for now, no. Now, either you buy federal government bond or you buy state government bond, any interest that you earn from it will not be what? Exempted from tax. You should have at least time to know for that one. You understand? Meaning that it tries to ensure that you will not only get exemption from federal government bond, you will not be receiving, right? You will not be exempted from tax. Either you earn interest income from federal government bond or state government bond. So that is part of the what? Income that are exempted from tax. Okay, the next one is currently what we have, right? If a company receives what we call an investment income, let's say you have an interest income from your domiciliary account. If you have interest income from domiciliary account, if you earn interest income, right, through domiciliary account, currently what we are saying is that it's what exempted from tax. But the law is now saying that, guy, Alpha, if you earn any interest income from domiciliary account, it is not exempted again, meaning that you are not going to pay tax on your interest income from a domiciliary account. But again, we have currently, whenever a banks give a loan to a company that is into agric business, right? Any interest income earned from them will not be taxed. Why? Because the government try to encourage banks to give loans to companies into agric, right, at a lower interest rate. To compensate the bank, they are saying that if you earn any interest income from it, you will not pay tax to it. But the NTA is saying that banks are for now, even though if you give agric company a loan now and you earn an interest, right, you will not be paying tax on it. But a cooperative business, right, corporate society, maybe we have unions, cooperative, or the likes. Any income that those people earn, they will not be taxed on it. Again, religious bodies, charity bodies, any income that they receive, they will not pay tax on them. Let me add to it. We have what we call collective investment scheme. Let's say your mutual fund, right? Any collective investment scheme, what is the meaning? Any pool of funds, right? That's it's regulated by SEC. Any interest income that you earn from them, you will not pay tax on it now in Nigeria, right? So, although what we have currently, the total exemption currently, it's not available for both individuals and companies. That is, but now the law is saying that no, now, whenever a particular individual or company bought a collective investment scheme regulated by SEC, very, very important, any income earned from it will not be taxed in Nigeria. Next slide, please.
So, Ines, I think at this point we need to wrap up with this section. Let's just try to wrap up with use some few minutes to that. Yeah.
Just give me 1 minute. Let me just look at this development levy. Then
yeah.
Okay.
Good.
Yes. So the next one is we have what I call it a group of tax or a group of levy. It is called developmental what levy? Development levy. Let me tell you, they want to kill Nigerian companies with different levies. You pay tertiary education tax, 3%. Those people are the way, okay, then let me say this one. They keep increasing it from 2%, 2.5, 3%. Companies pay tertiary education tax, 3%. They pay NASENI, they pay ITL, they pay police trust levy. The government is saying that this is too much now. Why don't we just put them together as one single levy, consolidate it? So it means that now, coming next year, January, right? There's nothing called tertiary education tax again. Nothing called NASENI again. All those levies, they've been merged together into one called what? Developmental what levy. And the rate now is 4%. Yes, to me, for a large company that pays ITL before, is a good one for them because we were paying around 4.6, 4.9 before. If you add this together. Now it means that who will pay this levy is just any complaint that is not a small complaint. As far as you are taxable in Nigeria, right, you are meant to pay what we call a developmental levy. However, non-resident complaint, right, or a small business that do not pay tax, they are all exempted from developmental levy. So thank you, guys.
Okay, so it seems like you still have some other slides that relates to company income tax. Do you want to quickly wrap up that in 3 minutes?
Let me just look at this one. Let me just summarize this. Then we are all fine. Currently, what we have, we call allowable expenses, meaning that there are some expenses that whenever a company incur them, right, it is allowable. You can remove it from your income, right? So the law that we use currently is called the rent test. I call it rent test for students. In fact, rent simply means that expense needs to be what? Only incurred, exclusively incurred, reasonably incurred, and what necessarily incurred. This is the problem. In fact, most important for our clients that they are into oil and gas. I've seen when our clients pay the particular amount of money to the area boys because they are in that near data area. IFRS were doing audit. They said, no, now, how would you pay them? I think they paid them 20 million naira. How will you pay these Agbero guys in Niger Delta 20 million naira? No, it will not be allowed. Do you know what we did? Very, very simple. When we went for the particular meeting, we've called them. Aji, how far now? Those people thought they will not pay you again. They are now here. Just come. When those people came in, they tried to disturb them. In fact, they even bought their tire. To the fact that we thought, like, can you see now? I'm telling you that if we don't give these guys money, it's reasonable to us. You are saying it's not reasonable. If we don't give them money, they won't allow us to operate. And you're not telling me that I'm doing business, what is reasonable. So this new law is saying that doesn't make sense. FIRS or the Nigerian Revenue Service cannot determine what is reasonable for my business or not. So there's nothing called reasonability again. There's nothing called necessary again. The only test that FIRS will be checking is that we only have what we call W-E, meaning that the only test now is just, is it only incurred? That is, did you incur all the money for your business? Or is it what exclusively what incur the purpose of for the purpose of your business? A key thing is, take for instance now, donation, right? Donation. Currently, you cannot donate money to, donation has some tests currently, right? And they cannot really donate a capital expenditure to a religious body. This new NTA is saying that if you love your pastor, in fact, you can even build church for your pastor now. But there's a threshold to it. The threshold is that whatever you are going to incur as a donation, you can donate to MPT. You understand? You can donate to your tutor, anything. But as far as that particular donation has a limit, as far as the donation is not more than 10% of your PBT, it's fine. Again, I think it's fine. I think that is fine. We can stop there. Okay. Let me say this. Since we have mentioned allowable expense, let's also mention the expenses that are not allowable. We call them disallowable expenses or non-allowable expenses. One of them is saying that, see, as all your expenses will be allowed as far as they are incurred for the purpose of your business. So you understand? It has to be for your businesses. If not, it will not be allowed. You can't donate money to OS. You know OS, Abi? And you want us to make it allowable. It is not possible. Again, the law is saying that company need to now be paying VAT on their expenses, saying that any expense that you did not pay VAT on them, it will not be allowed. Take for instance, currently when you do some repair, you can say, that repair is done by Brother Kabiru at the roadside, you understand? There's no VAT on it. The law is saying that, see, if you're calling a particular expenses over the counter, that you are not paying what VAT on them, know that when it comes to company income tax, that expense will not also be allowed for you. So it simply means that even though when your vendor, right, did not include VAT in whatever you buy for them, you need to self-charge, right, yourself and remit the VAT, because now we now have a rule: no VAT, no allowable expenses. It won't be allowed. Do you understand? And then any expenses that has been allowed for capital gain tax purposes, it won't be allowed for company income tax. I think that is fine.
All right. Thank you so much, Yunus. I'm very sure if we decide to give Yunus extra 2 hours, we'll still be here. So yeah, that was really an insightful presentation. So a good thing is that after this session, because a lot has been spoken on, after this conversation, we would be sharing the slides so that, we can catch up with the slide to get all of those details. All right, because of the interest of time, we're moving to our next speaker, who is going to handle the conversation around free trade zone entities and other tax incentives. And that person would be Damilare. Damilare.
All
Okay.
right. Please, can you confirm if you can hear me?
Yeah, we can hear you.
All right, great. Good afternoon or good evening, everyone. It's a pleasure to actually be on this call to discuss some of the impacts that the Nigerian Tax Reform Act is going to have on, small and medium-sized companies, big companies, as well as small companies. So some of the things I'm going to be discussing might not relate to you, but to a large extent, it's something that is good to actually know at the very least. Okay, so I will actually start with the free trade zone entities. So, of course, based on general knowledge, these are actually companies that are being treated as if, they are outside, Nigeria, in such a way that if you actually sell goods to entities within these companies within these entities or to these entities, it will be regarded as if, you've made an export and VAT does not usually apply. But starting from 2026, the effective date of this act, it's been structured in such a way that where more than 25% of the sales are to the custom territory, that is, a free trade zone has more than 25% of its sales. They sell more than 25% of their total, when you calculate 25%, when you calculate their revenue and you take 25% of it, and you see that more than 25% relates to the custom territory, tax will actually apply to the sales that is being made to the custom territory. Before now, there has been debate around it. The law is a bit silent about it, but now it is well detailed in the law. Also, effective from 1st January 2028, an entity would be fully liable to tax in respect of sales to custom territory, regardless of the percentage of the sales. So what is being done here is a step-by-step removal of that exemption. At the moment, the law is a bit silent about it. Starting from 2026, when you sell more than 25% or more of your revenue is being sold to custom territory, it will be subject to tax. But starting from 2028, any form of sales you make to the custom territory will be subject to tax. Okay. Also, the act, that is the NTAA, the Nigerian Tax Act, also clarifies that an approved entity should comply with all the relevant provisions of the NTAA. Before now, I think as far back as COVID period, several companies just decide, mostly within the free trade zone, decide not to file their taxes, the FIRS had to like write to them to start, filing. So maybe some companies may want to hide under the fact that, oh, we do not have this in the tax laws. So that is why this was also like included. Okay, so moving to the next slide now. Still on free trade zones, it says here that if a licensed entity hires a connected resident company outside the zone for manufacturing or approved activities, what this means is that, for large companies that may be operating within the custom territory, that is anywhere in Nigeria aside from this free trade zone, they may say, oh, let's try to do some form of tax avoidance, tax planning, and decide to establish a free trade zone entity, that is an entity within the free trade zone. Now, if this entity in the free trade zone hires, that is, maybe they have an agreement with, and that related party, which is outside the zone, say, oh, help me to produce this particular thing, help me to do this particular service. Now, the income that is being derived from such sales of such goods would actually be subject to tax as well. It will be treated as if it's the tax of the hired company, right? So all of this is just to make sure that all forms of tax avoidance is being reduced to the barest minimum. So this will not actually like apply if they discover that, oh, the pricing that is being used here is at arm's length. That is, there is no unfair reduction because the companies are actually like connected. Okay, so also we have it here that free trade zone entities will be exempted from VAT if the supplies are consumed within the zone. I mean, the whole essence of the free trade zone in itself is, oh, within the zone, any transaction happening within the zone should be exempt from tax. So now the law has like made it clear that, oh, if it's within the zone and based on the approved activity, such transaction will be exempt from VAT. Hi, Isaiah. I don't know. Someone is using marker at the moment.
Yeah.
Please help to look into it. Okay.
Yeah.
So this implies that if such goods is actually being consumed outside the free trade zone, it will be subject to VAT. Okay, so that's on the free trade zone entities. You can look into the Tax Act in itself to actually like gain more insight into this. Okay, let's move. Okay, amazing. We've looked at the free trade zone entities as well as the impacts that the Nigerian Tax Reform Act will actually have on them. Then let's look at a new incentive called the Economic Development Tax Incentive. So before now, we used to have what we call the Pioneer Status Incentive, but starting from 1st January 2026, this will now be replaced by the Economic Development Tax Incentive. So for you to actually like apply for it, for companies, the whole essence of Pioneer Status Incentive, Economic Development Tax Incentive is just to make sure that infant companies actually grow, right? Several years ago, we do not have producers of cement, right? But because there was actually incentives like this, right now we now have several companies who enjoy the benefits and are now doing what? Producing cement at a large scale, right? So the same process in applying for PSI also like applies for this particular incentive. And it's important to note that this incentive is actually 5% on the qualifying capital expenditure. That is the PPE that is being acquired, the property, plant, and equipment that is being acquired by this company. You take 5% of it, and that will serve as the tax credit. This is in contrast to what we have in the old version of the Nigerian Tax Reform Act. If you go online, it's possible you might see there are two versions, but the latest version, which is being issued by the Committee on Fiscal Reforms, shows 5%. And I also see that several Big Four organizations has adapted, like confirmed it that, yeah, it's 5% on the QCE. Okay, so it's also important to know that if there are any unused tax credits or qualifying expenses on this, it can be carried on for the next 5 years. So the summary of this is that starting from 2026, we will now have economic development tax incentive instead of pioneer status incentive. Okay, let's move to the next one. Okay, so there are several other tax incentives. This may actually like bore us, right? If I start to go into the details, but this is something that we can actually like look at during our spare time. But I just want to mention the last one that we have here, which some of us may be familiar with, and that is in Section 39 of the Outgoing Companies Income Tax Act, which talks about the incentives for gas utilization companies for downstream operations, right? The NTA does not like retain it in, that is, the NTA does not bring it. If you check the NTA, you won't see such benefits there, but they've done it such a way that if you are investing in gas pipeline, you will also be granted a tax holiday of 5 years after the expiration of the EDTI. Okay, let's move on. So now to the latter part now, we've looked at some incentives, we've looked at free trade zone. This is another aspect. Yunus made mention of it earlier, so I'll just like, he made my work easy, so I'll just like say a little about it. And that's the tax ombud, right? Back then, during secondary schools days, I usually see tax ombudsman in study text. I do not seem to even like understand what it is until now, where we now are about to have it in our tax law as well as in reality. So just as we had mentioned earlier, the essence of this office is I can't call it TAT. It's not a tax appeal tribunal where you stand, you go with lawyers and all of this. No, it's structured in such a way that it's like a voice for the masses, a voice for the voiceless, right? In such a way that you can go to the office, oh, so state internal revenue service did this and this and this and this. I'm here to dispute it. Help me to look into the facts, right? So these are some of the responsibilities. The responsibility says here that the office would ensure the taxpayers' rights are protected, raise awareness, and monitor fiscal policies, acting impartially without charging fees. You can see I put an emphasis on without charging fees. That's the expectation, right? Also, the oversight is that the person will be appointed by the president, that is the chief executive of the tax ombud will be appointed by the president, who will actually oversee all of these tax related compliance. And the expectation is that they are supposed to act ethically, right? Whatever reports they do will even be submitted to the president, I think to the Minister of Finance, who in turn will submit it to the president as well. And their work will also be subject to audit. Okay, so this is what the tax ombud is all about. Okay, let's move to the next. Okay, I think this is more or less like my final slide, and that's like the change from FIRS, Federal Inland Revenue Service. Instead of Federal Inland, we now have it as Nigeria Revenue Service. Just like you said earlier, before then, customs collect this, police collect this, various organizations collect different rates. But now it has now been combined that, there shall be one body who is in charge of revenue, who is in charge of collecting taxes and other relevant levies, which is the NRS. Okay, you will see that there is a change in the act in itself. Before now, we usually have what we call the FIRS-EA. Now it's now going to be the Nigerian Revenue Service Act. Okay, so what about the jurisdiction of this NRS? The expectation is that it's going to be wider than the current FIRS. So there could be some taxes that are being, or levies that are being paid to the customs that will now be paid to the NRS. Okay. However, the jurisdiction of the state tax authorities will remain the same. LRS collects payee. LRS will continue to collect payee. NRS will not collect for them. Okay. Also, we mentioned here that the Minister of Finance is now legislatively required to consult with the executive chairman before making some decisions. Before now, it was not explicitly stated, but now it is now explicitly stated. Also, the FIRS can assist the state and local government IRS to actually like collect and administer tax. What does this mean? Maybe FIRS is doing an audit in your company. Starting from next year, they could just say, we see that there's a, there's an anomaly in these taxes here in your payee. We can actually collect this tax and remit it to the relevant state internal revenue service. So there are going to be a lot of changes starting from 2026. It's something that we need to brace up. It's something that where possible you may want to relook, rewatch this video. I believe this video will be uploaded on YouTube. I actually urge us to actually check through the slides ask questions where possible. Okay. I think that would be the end of my slides, right?
Yes,
Yeah.
yes,
All
yes.
right.
Thank you so
Thank you,
much.
everyone.
Thank you so much, Damilare, for that juicy presentation. Yeah, I mean, two key things we need to note from Damilare's presentation. We now have the tax ombudus, which is like the voice for the voiceless, right? And of course, we now have IFRS now being NRS. So those are like two key things that we might need to take note from Damilare's presentation. Of course, the other things we can check later when we share the slides and give access to the YouTube videos just for us to go through it again. Yes, so we'll be moving to the next presentation, which is going to be on the changes affecting personal income tax. I know a lot of people are really waiting for this aspect because they really want to know how their salary will be taxed, right? So we're looking at this and also the value added tax changes. And this will be handled by Michael. Michael, I don't know if you are on the call.
Yes, Isaiah, please confirm you can hear me.
All right, Michael, we can hear you. Okay, so you have the
All right,
floor.
so yes, thank you very much, Isaiah. So, as Isaiah just said, right, I know everybody is really interested in this part. Everybody wants to know what will be the impact of the reforms on my salary, right, on my take home, right. I'll start by speaking about residency, right, which is one of the key changes, right, as regards to individuals, right. So there's been some expansion of resident individuals, right. So I mean, and in the gazetted fashion, some of these things were not included actually, and there's still a lot of gray areas around it. Anyway, so I'm in the UK, right? I relocated to the UK, but my family is in Nigeria. Um, I am still able to tax Nigeria, right? This, right? Family ties, substantive economic ties. So I have a business in Nigeria, I have shopping mall in Nigeria where I generate income, and I'm not even living in Nigeria, right? There's a likelihood of me being taxed, my Nigerian income, right? Domiciliation, right? Of course, some of these things were not defined in the law. However, using OECD definitions, right? You just look at a place where you frequent, right? A place that you usually go to, right? So let's say that I also did house in Nigeria that I usually would frequent, right? I mean, the law did not tell us how frequent. I have a house where I usually would frequent, where there's a likelihood of me being taxed, right? And resident individuals are taxed on their worldwide income, right? So once you are a resident person, that's your worldwide income, right? So good news is that uh,
Okay, I think Michael, we're struggling to hear you. Seem like your network is not too. Can you hear me, Michael?
the tax bands have changed. It means your tax exempt, right? All right. So
Hello, Mike.
I
Yeah, can you hear
can you
me?
hear me now? Can you hear me now?
Yeah, we can hear you.
All right.
So,
All right.
yeah, I think you might need to start with the aspects of income less or being equal to 800,000. I think that's where we stopped hearing you
Okay.
from.
Okay.
Yeah.
Okay. All right. Thank you. So, so once you earn 800,000 around below, you're exempted from tax, right? Um, that's just going in line with the minimum wage, right? As minimum wage in Nigeria is currently 70,000 naira. So if you earn 70,000 naira, you're exempted from tax in Nigeria, right? And the new band, the highest tax you can pay in Nigeria is now 25%, right? It used to be 24%, now 25%, right? And then competition with loss of employment, right? So before now, um, it was capped at 10 million, right? And any excess of that is charged at
Hi, Michael. I think you are still breaking.
The differentials, right, would then be sort of it's being taxed at CGT rate, right? The next slide. Hi, Isaiah, can you move to the next slide?
Yeah, so Michael, I think you might need to touch on the compensation bit. We lost you again.
Oh, okay, all right.
Yeah.
So for compensation of loss of office, right? I mean, as we speak, it's 10 million naira exempt. Your 10 million, I mean, once it's below 10 million and below, it's exempt, right? The excess of that amount is taxed at CGT rate, right? Which is currently 10%, right? But come January, right, the threshold has been increased to 50 million naira, and the excess of that, the excess amount of 15 million naira will be taxed at your regular PIT rate, right? Instead of CGT rate, right? So that's the difference. So that's just to give you, I mean, lots more room for, I mean, people that just lost their employment and all that, right? So that they have some succor for losing their job, right? So Isaiah, please move to the next slide.
Okay. Yeah. So, Michael, can you hear me? Hello. So I think we're struggling to hear Michael. Um,
I think it's in transit, so
yeah,
that's
yeah. So, I think he has some couple of things to talk about. I think, let me see if we can. All right, Damilari, are you on the call? Damilari, are you on the call?
All right. So yes, and of course, this is good news for many, many.
Yeah, Yunus, please, can you take it up from where Michael stopped? Just a very quick one.
Apologies everyone. Yes. So where we are currently is simply trying
Good
to talk
evening,
about
everyone.
the
Please, I'm really struggling to hear Michael and
Yeah, sorry for that. We have,
apologies, please. Can you hear
yeah,
me? Can you come on? Like, can you hear me?
yeah. Yeah,
Okay.
good. Yeah.
Yes. So I understand. Me personally, see, when it comes to this tax, I don't want to hear anything. No. What I want is that my tax is even getting higher or lower. So currently, what we have here when it comes to personal income tax rates, we have the rates starting from the first 300,000 that we have. In fact, the tax started from your first money, that from 1,000 naira itself. So because this rate is kind of progressive, we have 7%, 11, 15, 19, and the likes. This is what we have currently, meaning that even though if I earn a little bit above the minimum wage, let's say for instance I earn, if my taxable income, it's even if it is not up to 300,000 naira, I'll still be taxed at the rate of 7%. This is the current tax rate that we have currently here in Nigeria. But this new tax law is saying that no, now, guy, we can't be asking someone that is a teacher that only earns, let's say, 60K to be paying tax to us in Nigeria as personal income tax. Because how much 60K? So the new law is saying that no, we now have a new rate, right? Saying that, see, if you after computing your tax, right, after computing your income less on deductions, if what we arrive at after the deduction is not up to 800,000 naira, right, it means that you will not pay tax to us here in Nigeria, right? But if after that, what you have, what you earn is above that, right? Take for instance, someone whose taxable income, right, is for instance 750,000 naira. Note that the question is that is it more than 800K? If your answer is no, no tax. Right. But someone that earns that who's taxable, I'm not saying what you receive now, because what you receive at the end of the month is your net pay. I'm saying that after the computation, What do I mean by computation? This figure is not your gross money, your gross income. No. I'm saying that the way we do it is in personal income tax. If you don't know, we add together all what you earn, right? What you earn can either be cash or non-cash, right? We add everything together. Your base salary, your allowances, everything added together. Then we remove some normal deductions, or we call it statutory deductions. For instance, we remove your what? Your pension, your housing fund, contribution, and life. Once we remove that one, right, we arrive at a particular figure called your gross income, right? From that is where we'll now remove what we call consolidated relief allowance. We have that one currently in Nigeria, which is we'll look at it the higher between 20,000 naira or 1% of your gross income, any whatever is higher, then we add what we call okay, then we have 20% of gross income to it. I'm saying that after those computations that we have done, right? If your taxable income that you have is lower than 800K, Baba, no tax for you. But what if what I now, after everything, after the calculation, what I now have as my taxable income is just 850,000 naira. Do you understand? We will say the first 800K will not be taxed. Say it's free. Bonus, Jara, Fisi, you understand? It's free, no tax on it. That means that you only pay on the excess of 800,000 naira. That means if it is 850, 800 no tax. You will now compute a tax at the rate of 15% on the 50,000 naira. But we are saying that this new tax law, we've done series of simulations. I'm telling you, a lot of simulations saying what this person earn this. As far as what you earn, right? As far as what you earn as your gross income, right? As a total emolument is not up to 25 million naira in Nigeria currently. I'm telling you, you are going to pay what? A lower amount of tax in Nigeria. Do you understand? Someone like me now, how much is my salary now? How far now? Me, it's always annoying to me saying that at the end of the month, I see a lot of LIRS. I just see, I'm like, gee, what comes to mind is that it's supposed whining me. If they bomb policeman, it should just stop me because I'm paying you. So again, this is a good one for us. We should be looking forward to seeing a lower amount of tax being remitted. This means that what we'll now be receiving going forward from our employer will now be what? Higher than what we receive this month. Yes, that's it. So we have some deductions as I mentioned earlier. I mentioned something we call consolidated relief allowance, which is kind of removed, saying from what is being taxed, saying that if initially what I have as my gross income after everything is, let's say, 20 million naira before now, that 20 million naira will not be considered for tax, not until when something is removed called consolidated relief allowance, which is two folds, the higher between 20,000 naira or 1%, right? Or 1% of my gross income, whichever is higher, plus 20% of your gross income, right? Here we have the rate 21%. Yes, it's correct. 21% is kind of used for anyone whose gross income is 20 million naira or above. Yes, that is that. But the NTA is saying that we want to cash house owners. Let me say it gently. Landlord is collecting money, they're not paying tax. You understand? So in a way, for we to capture the house owners, we are saying that no, guys, we want to scrap what we call CRA, right? We will now replace it with what we call what? A rent relief. Please, we must not be comparing these two things together. Although it is just part of the initiative saying that we are trying to capture the landlord, but that is not the main reason. It's just saying that if you did not forget, the rate of tax has now reduced, right? Do you understand now? You can't benefit in everything. Again, they said they are removing the CRA. It will not be replaced with what we call what? Rent relief. What is rent relief? First thing is that I've seen a lot of people arguing about this thing. guy have for now. The total amount of relief that you can get, regardless of whatever you earn, even though if you earn 1 billion, it can be more than 500K. How does this work? It's saying that it is going to be the lower of 500,000 naira or 20% of the rent that you pay. 20% of your annual rent, whichever is what is lower. It means that someone like me that pays, let's say, okay, someone like Isaiah, not me, that pays the rent about 5 million naira. Do you understand? What do we do? If you want to determine Isaiah's rent relief, we will say, let's apply 20% of 5 million naira. Whatever we arrive at, comparing with what? 500,000 naira, whichever is lower is Isaiah's what? Rent relief. But who are those entitled to this rent relief? I beg you, if you are squatting with Isaiah, no relief for you. If you are living with your parents, no relief for you. Do you understand? Again, people were like, I will scam them. Know that the verification of your rent relief does not lies to you, right? It is based on your employer. Your employer will ask for this. Your employer will ask for this one. If you lie, scam your employer. You know, say next one, last one, just get please sack letter and straight. But it means that you'll be requested to bring receipts. This is when we will not be asking the landlord to give us what the receipts, or probably if you cannot have a receipt from them, when you are sending the money to them, put what in narration called what rent. Again, but there'll still be what in verification. And same way people ask that, wait oh, if I have wife, my employer, my wife too is working, me too I'm working. Can me, I'll scam the system now. The same receipt, I'll carry and go my office. The same receipt, my wife doesn't work like that because this will still be checked, it will still be verified. This is what we call rent relief. It's just a small money, but it is huge. But those that can be that are entitled, you have to build someone that pays rent. If you don't build house, like me or like Simeon, you understand? There's no relief for you. It's not for someone that has house. It's for people that are still paying rent because we want the poor to breathe. Again, I think I've said it all. Yeah, yes.
Yeah, so I think let's confirm if Micah is back, Yunus, so that
We'll take
if
it
he's
on.
happy to continue. Yeah. Micah, are you back? Micah, do you want to take the VAT bit? Are you available? Okay, so I think Yunus, you can continue.
Okay, yes. Here we have what we call VAT. VAT is simply saying our value added tax, right? It is simply a VAT that is paid on the consumption of valuable goods at different level of consumptions, right? Okay. What we are saying here is saying that what is the new change that we have here in VAT, right? It's very, very simple. Again, we've mentioned that when we are doing the initial slide saying, please, whenever you buy anything now, if you are a company, right? Whenever you buy anything now, ensure that you are paying VAT on them. If you are not paying VAT, be it an asset too. When you buy an asset, you have to pay VAT on it. If the person selling the item to you do not include VAT on it, you must what we do what we call a self-charge. Couple the the VAT by yourself and remit the VAT to the Nigeria Revenue Service, which is currently the FIRS, right? Because any expense that a company incurred without paying VAT, right, it will not be allowed. Again, we need to understand that how do we compute VAT? There are some companies that, okay, let me use this one to explain it. The next thing we have what we call zero rated VAT, right? Zero what rated VAT. This item before now, if you did skills very well and you read, not because you cram, you remember that either Mikey or Damilare or I myself taught you that basic food items are exempted from what? From VAT. But the law is not saying that no. This list of items were initially exempted. Do you understand? But the new law is saying that no, it's been exempted does not favor both the consumer and the producer. What's the meaning? When we say an item is exempted from VAT, That means that the producer cannot transfer, cannot charge you, cannot transfer the VAT to you. What they will not do is that they will not tell you that they are charging VAT. Whatever VAT they've incurred, take for instance, I produce a basic food items. Currently, the law is saying that even though me, we won't produce them, if I've paid VAT before now, right, that VAT I must not charge as higher. Why? Because there is no VAT on. What me I will not do is that I can't be the one to face it now. I will not go and add that VAT to the cost of my goods. That will not make the amount that I'm going to make as I have to pay for the goods to be very, very high. Do you understand now? Because it is high because the producer, we include VAT in what you pay to me, but I'll not call it VAT to you. This new law is now saying that no, now let's do something different. All what we have mentioned here, we are transferring them from exempted to zero rated. If an item is zero rated VAT, that means that that item is VATable, but the VAT rate on it is what? Is 0%. It simply means that what will not happen? I'll say, gee, I enjoy a VAT of how much? 1 million naira. What will I do? Since I cannot transfer the VAT to Azaya, I'll say, government, come. Let's say something. It is zero rated, Abi now. The VAT to be given to the government is a difference between your VAT input and your VAT output. Government, I now have VAT input, but I cannot charge Azaya because you said the rate is 0. Please give me back my VAT. That means that the VAT on this item that was initially hidden or packaged or packaged in your cost that you pay will now be removed from the cost of these goods, meaning that the cost of these goods will now reduce because the VAT that the producer incur will now be transferred to the government. Government will give it back to them. Do you understand? That is what we have currently on VAT. Again, don't be among those people that will say, what is even the difference between, you say something is exempted, and that says it's now zero rated. It's not the same thing. It's not the same thing. Because before now, the employer will go and put inside one thing for you that you don't know to increase your cost. Again, this is a welcome idea because we expect that the cost of buying these things should reduce going forward, right? Okay, we have what we call how they share VAT. Let me tell you, one of the things that cause problem for the people that were doing this particular NTA is VAT sharing. It's VAT sharing. You know, when it comes to money, it's a problem. So currently what we have before now is there's a different way of sharing VAT. In fact, if you don't know, I'm so sure, Azaya, your state, if you don't know that my Lagos state, my Lagos state, and Rivers state, right, they generate more than 70% of VAT revenue that we have here in Nigeria. That was the reason why, if you remember in 2021, right, both Lagos and Rivers State, they sued the federal government saying that, guy, half now, we are bringing more than 70%, and you're sharing this money to us equally. Are you whining me? It's so bad. So when they took federal government to court, the court's judgment is saying that no, VAT is a federal tax, and then it will still continue to be administered by what FIRS. But what the NTA does is to make companies, country, and state to do better. It's reduce or change the way VAT will now be shared. Before now, federal government collect whatever we make as VAT. Federal government collect 15%. States 50. Local government 35. But now it has now been changed. Now federal government will now be collecting what? 10%, state 55, and then local government still remain the same percentage. But again, note that it is not being shared among the state equally, right? We have some parameter that we use saying that states, you need to develop your state. As I tell government, your governor to develop your state, because to not be shared saying that, let's say for instance, what we want to share is 5 trillion naira. We will look at it. 50% of that 5 trillion will be shared equally. The remaining 50% will be shared into two. 20% of it will be based on population, right? Which state has the most population will give them more. The next one is that place of consumption. VAT is being paid in the state where you consume, right? This is just the last one is just to ensure that some governors do better in their state to ensure that people also consumed vatable goods in their states. Again, we have what we call a way of tracking those VAT, a way of tracking transactions here in Nigeria. It does not really speak to VAT alone. We call it what e-invoicing, right? It is just an electronic way that the government wants to use to find a way to track the transaction that every one of us do. Again, they are saying that some companies, right, what they do is they do not record some revenue that they earn. It's not saying that companies, please, before you issue any invoice, it must be tagged. There must be a tag on it. So that whenever a company issue an invoice, federal government will know that this invoice or you have issued it out. There's no way companies will not come again to come and hide, say that no, there's no any way again. Again, I can tell you for free, this is because of the e-invoicing and then some way to modernize the Nigerian tax system. That's one of the reasons why the chairman of FIRS proceed toward France to go and seek for their aid or support to find a way to ensure that the Nigerian tax system is done electronically.
Thank you
Yeah.
very, very, very much, Yunus. That was such a juicy presentation, I would say. Because of our time, guys, we have really spent over an hour on this session. I mean, we're far beyond the expected time for this session. So, but we'll be having just one last session, guys. Please, it's going to be around the administrative sanction and disclosure requirements, which is going to be handled by Kendi. Guys, please, it's not going to take time. So please, Kendi, can you please just do a very good wrap up on this session, please? Yeah.
Okay, everyone, good evening, everyone. Nice to meet you all. Well, a lot has been said, discussed about the four tax reform acts, and as you know, there have been different punitive measures or administrative sanctions that has been introduced by the Nigerian Tax Administration Act, just as a way to enhance compliance, ensure that people comply with these specific laws and penalty sanctions that are in place in light of people or companies that fail to comply. So the first on the list is failure to register for tax. So this is not new, it's still currently in the current law. It says 50,000 in the first month of defaults and 25,000 naira for each subsequent month. So every person is meant to register for tax in Nigeria. If you generate or make income from Nigeria, resident company or people resident in Nigeria, you're meant to register for tax. You need to have a tax identification number, a TIN. And so this one is just there to ensure that people register for taxes. And because over time, if you notice that majorly non-resident companies that generate money or revenue from Nigeria, they're not registered in taxes. So the government sort of want to capture companies into the tax net. And one of the punitive measures is to say that any business or any company that carry out transactions with a non-registered person will be liable to pay 5 million fine for having transaction with that person. So what does it mean? That as a business, you need to ensure all the checks you need to put in place is to ensure that before you carry out any business with anybody, you need to ensure that that person is registered. So as a business owner, as a company, before I engage you, one of the checks you need to ensure is this person registered for tax purpose? Does this person have a TIN? Because if you don't do it, you are imposing yourself a potential 5 million naira liability. Also, failure to file returns. So currently you have two different fines. You have for the VAT, you also have for the CIT. For the VAT is 50,000 in the first month, 20,000 for every subsequent month. Then the CIT is 25,000 in the first month, 5,000 subsequently. But this, like what has been said so far, one of the things this act is trying to harmonize the tax system in Nigeria. We have different things in place. So just to harmonize it too, you have now failure to file tax return says 100,000 in the first month of default and 50,000 naira for each subsequent month. So what does it mean to you? It means that you need to ensure you are compliant because the fine or the levies has been increased to like almost times 3 times 4 of what it used to be currently. So it means that as a business owner, as a person, you need to deliberate and quite committed to ensure that taxes are filed at the right time, or else you'll be exposed to these fines of late returns. The other one is failure to keep accounts or provide records to tax authorities. So tax authorities from time to time do audit on individuals and companies, and sometimes they ask for documents, ask for stuffs. So if you do not provide them these documents, you are liable to 100,000 as an individual and 50,000 for companies. In addition, it's also known that as companies, there's a particular provision in the current VAT Act that allows companies to keep that mandates companies to keep record for a minimum period of 6 years. So you can't say that transaction was done probably 2021, this is 2025. You don't have it again. No, companies need to at least keep record for a minimum period of 6 years. So you won't say because you can't be ignorant of the law to unless you be liable to this fine. So next slide, please. So in inducing of tax officials, so over time, businesses engage with tax authorities, and you see that sometimes people try to lobby tax officials, try to find a way of getting tax advantage, and they pay some unfair amount of money. But this place is saying that any individual that tries to lobby or induce a tax official for their own tax advantage, when this is discovered, the individual paying 500,000, then if it's a corporate body, it's 2 million naira or imprisonment not exceeding 3 years. Other of this is failure to notify FIS of change of business address. So you're a company, you just change your address. Well, maybe you are in Ikeja and you now move to VI and you fail to notify the tax authorities of this change within 30 days, you'll be imposed to a fine of 100,000 in the first month of default and 50,000 for each subsequent month. So this is currently also in the current law, but I think the amount has now been increased upward just to ensure that businesses do the right thing. If you move your business location, you need to notify the tax authority because from time to time you'll be getting letters, correspondences with them, and they will probably have dispatched those letters to your previous address. They are not aware of a new business location, so you need to ensure that if there's any change in your business address or location, for that, the tax authority must be aware of this. You need to notify them. Failure to collect and deduct taxes. So currently in terms of withholding tax, somebody has issued the invoice, when paying that person, I meant to deduct withholding tax at the applicable rate depending on the transaction. But if as a person you fail to deduct that tax, you'll be charged an administrative penalty of 40% of the amount not deducted. And also in the case of there are some people and they deduct that amount fine, but they don't remit it to tax authority. There's another fine or penalty for them also to ensure that okay, sometimes because that's quite rampant. People deduct and don't remit to the tax authority. So there's also fine for that. Obstructing tax technology development. As said earlier, one of the speakers, the tax authority is kind of moving towards a tax system that blends tax and technology together, right? You have the e-invoicing system now, and it's on board now. The tax authority is using it out in phases, right? So if you're a business or you're trying to obstruct the use of this tax technology, you'll be imposed to a penalty of 1 million naira in the first day of default and 10,000 naira for subsequent default. That means businesses, companies must embrace technologies. Yeah, it's quite. We agree that sometimes it may be quite difficult to transform from the manual system to the use of technology. But again, it's very important to adhere with the laws because if not, this penalties will catch up with you. And yeah, nobody wants to pay this such amount of 1 million naira for not allowing the tax authority to integrate their system with the tax system. So yeah, there are quite a lot of these sanctions, but this is just like a highlight. So if you want to see a detailed more of them, you can go to section 110, so about section 105 of the Nigerian Tax Administration Act. It spells out a lot of these sanctions, a lot of fines, and if you don't do this, you'll be able to pay this and these fines. But just for time purpose, we just highlighted a few of them. So next slide. Yeah, so this is the last one, and this part, the section 1934 of the NTA state that every company that intends to carry out tax planning for the purpose of getting a tax advantage is to notify the tax authority of these transactions. So currently, businesses, companies do a lot of tax planning. Tax planning is fine, it's allowed, and they kind of tax planning just involve taking advantage of incentives, reliefs, just provisions within the tax system just for tax advantage. You see companies establishing free trade zone, transferring their assets to these free trade zones because they know that when in free trade zone you pay no taxes. You see companies getting pioneer status incentives, which at least exempted for tax for about 3 to 5 years. So companies just structure their activities around this area. You see manufacturing companies investing in assets so that at least they're able to claim capital allowance, which in a way will reduce their taxable profits and at the end reduce their tax payable. It's fine. But you know, now I want to ask that what is the major purpose of this provision? So companies now, some companies do aggressive tax planning. So aggressive tax planning involves doing tax planning, but doing it in a very aggressive way. So you see companies having branches in the tax haven areas, the low jurisdiction tax areas. For example, Cayman Island, Dubai, Saudi Arabia, and some of these Arabian countries, they pay little or no taxes. So you see this company moving funds to those places, to those locations, and at the end, they do not pay anything. So over time, the tax authority has found to this, the OECD guideline I also found to this. For related parties, companies that are related, you see them doing transactions between each other, not as arm's length. So company A and B are related, but because you are related, I'm selling to company B at a discount, but I'm not giving that same discount to an external party, which is company C. So these are just some of these aggressive tax planning that people have been doing over time, and that's why the tax authority has said before you do any tax planning, yeah, we want to see it to ensure that it's not an aggressive form of tax planning that will now help you to evade tax. Yeah, tax avoidance is okay, it's legal, but companies now trying to make use of the loopholes in the tax system is what this provision of the act is of the law is trying to avoid. Well, there's going to be further guidelines on the modalities around this, what type of information to be disclosed, the penalties or fines that will be imposed if you don't disclose your tax planning to the tax authorities, document you need to provide, and the timeline. But for now, it's just for us to be aware that when carrying out any tax planning, there's going to subsequent that you need to inform or notify the tax authority. So this is just some of the recap of this some of the key highlights in this Nigerian Tax Administration Act, talking about the sanctions and the sanctions and the tax planning. So as businesses, as individuals, we need to ensure that we take compliance very serious. The government is now going hard on people that are not compliant to the tax system. They're trying to ensure that compliance is very key. And so it's very wrong for us to be caught at the wrong side of the law. If that happens, we are putting ourselves to a lot of fines, a lot of penalties, and that will not speak good of businesses. So as businesses, you need to examine your system, put in place good structure that enhance compliance and continue to abide with the tax law. And if there are any gray areas, it's very important to seek advice of a tax consultant or tax professionals. Yeah, thanks.
All right. Thank you so much, Kendi. I mean, a lot has been said in this session. We have gone through so many aspects of the changes. I mean, we have talked about the effect on CIT, VAT, personal income tax, free trade zone, even the penalty and sanctions, right? So we would have a very short summary just to wrap up this session, basically, and that is going to be handled by Simeon. So, guys, we're not really going to take much of a time on that. It's just going to be a quick one. So, Simeon, I don't know if you're ready to take that up.
Yeah, thank you, Isaiah. Can you hear me?
Yes, can hear
Okay,
you.
thank you. And good evening, everyone. And thank you to our speakers. I think it's for me personally, it's been a very, beautiful session, very insightful. Tax is not something anyone is expected to see it and say, oh, what's going on there? I'm not a tax professional and all of that. So it will be a very big misunderstanding of what is going on in the Nigerian economy right now. It's everyone's business, and you need to know what is actually going on. I mean, just to bring everything into proper perspective, we need to just look at some important highlights around. So let's start with common pitfalls that, businesses, companies, and even individuals need to avoid. So the first one is ignoring transitional provision of the act, right? So, I mean, from the speakers, we've seen, highlight around federal government involving the government of France and some, key advisors on this law. And we see new initiatives like e-invoicing and many others telling you that you need to really stay on top of your game. And the timeline is also very short, which a lot of people are talking about, seeking for extension and all of that. And that tells you how serious federal government is in bringing a lot of people, a lot of businesses into the tax net, right? And I mean, it was one of the speaker, Yunus, that was talking about, relief, rent relief, and all of those. And these are things that we did not have before now. And you don't want to rent a house without getting receipt and any other necessary documentation. You don't want to pay for rent or any fee without putting a proper description, right? Even as an individual. And even for you as a business, putting in place a proper system to be able to drive compliance, right? You talk about IT system, you talk about several control system that can help you to drive compliance is something you don't want to take for granted. So, and that's number 2 point, which says poor documentation and record keeping. So that summarizes it really that as for you as an not just for business, even for you as an individual, documentation and record keeping is very key. And these days, it's not a must you have things stored on your phone or you have it physically stored. You can create a personal drive, shared drive, Google Drive, where you can store some of your documents. And if these things are needed at any point in time, you can always bring them up, right? And Kende also highlighted, the penalties, the fines that gone are those days where you see fines, ridiculous fine, and you are even encouraged to pay fine, right? So we are becoming a bit more serious with fines where if you default or you actually do the wrong thing or do things that you're not supposed to do with regards to this law, you get to pay significant amounts. So we are moving to that zone. So it tells you that we need to, as businesses or even as a sole trader or as an individual under employment, you need to be mindful of late filing, remittances, and all of that, right? And then the last point under that is treating tax compliance as an afterthought. And what this is really looking at is so the effective date for this new law is January 2026, and you don't want to wait till the new year or till the tax is effective before you start asking questions and all of that. So you need to ask questions. How does it affect you as an individual so that you can put things in place? And if you run businesses as well, or you work and manage, some aspect of the business you work for, you need to really, think ahead and see how you implement solutions to manage the situation. Okay, so next slide, please. So action point for businesses really is conduct a tax impact assessment. And how does it work? So even in financial reporting, we see new standards, right? So you start off, no matter how complex it is or how easy it's looking, the first step really is for you as a business to ask yourself, how does it impact you? And you can engage professionals to do a proper tax impact assessment for you, just to see what are the areas you need to consider changing, maybe implementing a new system, update any internal policy, and anything you need to do to stay on top of your game with regards to, the new tax business that government is embarking with you. And yeah, I've mentioned that you need to also engage tax advisors, ask questions, even as an individual. If you don't want to engage tax advisors, that's why there are platforms, right? Federal government or the committee in charge of these whole activities has also brought very fantastic initiatives, engaging content creators that are finance related as well, just to help sensitize the public, right? So it tells you that the information is there. All you need to do is lay your hands on them, acquire them, and ensure you stay on top of your game. And you need to, monitor the compliance calendar as well, just to ensure you are doing the right thing at the right time. And that's basically, the few points I needed to highlight. But just to summarize it and take it away now is few points here says NTA 2025 requires early preparation and proactive compliance. We've talked about that. And this is just to tell you that you cannot wait till 2026 before you start asking about the new tax law. So you see a lot of the law talking about even you as an individual, right? I mean, the minimum wage bits is a big development, which, if you look at that structure, is basically to eliminate those in that net or in that bracket out of tax system so that you don't tax people who are earning literally nothing, right? And then the second point is businesses that adapt quickly will reduce risk and cost, and that's it. So you need to, no matter how small your business is, you must keep records to be able to prove at any point in time that, oh, maybe I fall under a small company, and you can always prove your point to the government or to the tax authority, right? And even if you are a medium size, so no matter the size, or even if you are not registered as a company and you are under the sole, you are supposed to maybe be taxed under the personal income tax, say a registered business, not a company, right? Record keeping is also something very key that will help you reduce risk and cost. And then practical implementation is key, not just understanding the law. And what this is telling you is that it's not enough for us to have this session and you spend 2 hours understanding the changes. We send you the slides, you walk through it to understand everything. See, being proactive and implementing these little things is actually key. So if you have the understanding that you have the rent relief, which you can claim and enjoy, on your income, to reduce your tax. It is not enough to have done that knowledge. You must obtain the necessary documentation to enjoy that relief, right? And the same thing across all the areas, of the changes that we have walked through with our speakers, right? And on a last note is we know, that there are a lot of questions on this tax matter. And what the team has also done is to bring up some key questions that, we're trying to be proactive as well with your questions. So we're going to walk through this together, and then when we are done walking through, we can also go through the comment section and see some of the questions that you've been dropping. If they are not yet answered, we can throw, some of those questions to our tax professionals in the house. And the very first question says, when does the Tax Act take effect? I mean, the answer is there on the screen. The new Tax Act take effect from 1st of January 2026. So it's here, like Yunus said, few days. So it's not next year. It is actually few days. And then the second question says, are small companies exempt from companies' income tax and other levies? The answer is somehow yes, because the major taxes are exempted for the small companies. So take, for example, CIT, the capital gain tax, and the development levy. So they are exempted from those taxes. So of course, the speakers have walked through the thresholds with us, and those are some of the things you also need to pay attention to understand. And then the third question is, are digital and online businesses required to pay Nigerian taxes? Yes, digital and online businesses providing services to Nigerians must comply with Nigerian tax law. So far you're doing, irrespective of your location, if you are doing even if you are doing it online, providing services to Nigerians, you are required to pay tax and comply with the tax law. And then the second question is, what is the correct small company threshold under the new tax law? I mean, we've gone through this before, but it is 100 million. The 50 million in the NTA is a drafting error, and then you have the Nigerian Tax Administration Act, which overrides the NTA if there's any conflict, right? So it is actually 100 million. And then the next question is, do I need a payer ID to operate my tax account? I mean, I've seen these questions in the chat box, and I've seen answers being provided by some of our speakers. And the answer again is yes. Under the NTAA 2025, every taxable person earning income from trade, businesses, or economic activities must have a payer ID, except students and dependents. And of course, for businesses, this has always been in place, right? Where you must have a TIN. As you're registered with CAC, you need to obtain your TIN directly, and this is going to be harmonized as a form of tax identification. The next question is, will transfer and deposit in my bank account be taxed? Don't be scared. The answer is no. Moving money around, whether via POS, transfer, deposit, withdrawal, is not taxable. Only income earned is subject to tax. And this is to tell you guys that you have to be careful with the way you describe transactions, with the way you put some of your, accounts and information out there, so that there will not be misunderstanding between you and the tax authority. I think we can move to the next slide. Last slide, I guess.
Yeah.
Okay. Yeah. So the next question is, will tax authority now monitor bank account for businesses more closely? Oh, this is a good question. Yes. The authority will have an easier time tracking compliance. However, your bank balances will not be taxed. That's a repetition to really emphasize on that point. Only money that you earn, profit that you earn, will be taxed. And this again is to tell you that your documentation is very, very important. I remembered before moving to this part of the world, each time I'm making transfer, I'll just use TRF transfer, or just use short words and move on, right? But as time goes on, or I got to realize that the description you put out there is actually very key. And with the new tax system we are moving into, please be mindful of how you describe transactions in your bank to avoid confusion or to avoid fights, right? Next question. I run a one-man business. Do I pay personal income tax or company income tax? So it's a business. Or let's even say, even if it is not you know, if it is a registered business, the normal way you can register just a business with CAC, it also fall under this question. So the answer is, if your business is registered as a sole proprietorship, that's business name with CAC, you pay personal income tax. If it is a limited liability company, you pay company income tax, and that's it. And I mean, for thinking about it again, for businesses, it tells you that you need to really look at things very well before you actually consider the structure you want to use, because you've seen that you only enjoy relief from the personal income tax angle if your income is 800K or less, right? And then anything above that, you see that progressive tax rate being applied. But if you're a business, you see a bigger threshold that covers you. And that tells you that, thinking from the business perspective, you must understand those structure to be able to structure your business, or understand how to register your business. This is very key. I'm speaking to my one-man businesses in the house now. Okay, so that's it really. So, you need to do the planning properly. And then the next question is, who is exempt from personal income tax? And this has been answered. I mean, just for us to take it away, individual earning a minimum wage, which is in the minimum wage should be about maybe 840K. I mean, this is just to help you structure it properly. And the law says earning below 800K annually would give you that exempt, right? The next question says, if I sell shares and make a profit, will I pay tax in 2026? The answer is no, as long as shares sold are not more than 150 million in value and gain does not exceed 10 million. Gain above such threshold, then you need to bring tax to the tax authority's table. Okay, so next question says, if I earn dividend or rent abroad, will Nigeria tax it? Dividend, interest, rent, royalties earned from outside Nigeria are exempt from tax, provided they are brought into Nigeria through the approved channel, which is the normal banks now. Yeah, and the last one really is very controversial one now. In fact, I've had a couple of guys that I know call me, what's the plan? Please, what do I need to do? And the question is, do creative professionals, authors, musicians, actors, comedians, sportsmen, and you've got many of them, you're also watching a lot of them, and they've been earning quite big and they're not paying tax. And the question now is, will they now pay tax? Because a lot of this income are earned, say YouTube and other platforms, not in Nigeria, but with platforms outside Nigeria. And so will they still enjoy exemption from on those foreign income? The answer is no. They are now required to pay Nigerian tax on all income earned, whether within Nigeria or from foreign source. And the to sum it all, it's just like when we had in the banking sector, when we had the BVN introduced then. So a major change in this regards is also the introduction of the tax ID, which will, capture both the same way we have team for businesses. Let's bring all individuals into that net so that we can track everyone. And that's what the Nigerian government is trying to do. And just one more thing, which is a concern, let me add as we wrap up, is that a lot of people are also asking, oh, all of these tax, what is federal government going to do for us with this money? Are we going to be paying this tax and they'll be using it to pay the bogus salary, the big salary they are paying, the National Assembly members and the rest? I think my advice would be that as professionals that we are, especially for ICANN members in the house, so would be to live by the code of ICANN, the code of conduct. There is this part where you just need to do your own part. And, in tax, there is the concept of tax avoidance and there is the concept of tax evasion. So you need to position yourself in a way to manage your tax liability and avoid as much tax as possible, right? But it is not advisable for you to actually evade tax. Tax evasion is a criminal offense, right? So you can plan yourself properly, position your businesses, position yourself in a way that you can manage your tax costs effectively. And tax avoidance is legal. And that's a fact, right? So everything comes with your tax planning. As an individual, you need to plan your tax well and leave the responsibility of the government to the government on the part of what they are using your money for. If you are opportuned to be in a position where you also have voice, maybe you're a content creator or you have friends who are in the House of, the National Assembly, advise them, where you have, a lot of content creators are now very outspoken on finance matter, and we see a lot of them being brought into, promoting this new initiative. So let's wait to see the new changes that government would also, bring on board in terms of utilizing the revenue that we're expecting to come with the new tax system. And that's all I have to add after the beautiful presentation from our speakers. Thank you, everyone.
Thank you, Simeon. That was actually a very nice presentation. I think Simeon has been able to provide solutions to some potential questions some persons would like to ask. And again, I think another good thing is that going through the chat section, I've seen that our speakers has been providing responses to our questions. So we are now moving to the question and answer segment. For this section, right,